These are the top 5 things that you should never put on a credit application that the banks don't want you to know about. So in today's episode, I want to give you the top 5 things you should never ever put on a credit application because it can get you denied or cause you to go under what we call a financial review, and you don't want that nonsense from any bank or lender. Now, before I get into this list, I have to give you one major tip. The number one thing that you always need to do is to check your credit score and understanding what credit score to look for when you're going to apply for something. And understand that Credit Karma is not your credit score. If you're going to apply for a credit card, you want to look for your FICO Bank Card Score 8 and your FICO Bank Card Score 9. Now, Goldman Sachs is the only one that's really pulling FICO 9 and Navy Federal Credit Union. Other banks and credit unions may adapt it later, but currently those are the only 2 that are using it right now. If you're trying to get an auto loan, you want to look for your FICO Auto Score 8. All of the other ones don't matter. FICO Auto Score 8 is the most commonly used for auto loans. Now, if you're trying to purchase a home or possibly do a HELOC, usually and generally speaking, they're going to be looking at your FICO Mortgage Score 2, 4, or 5, or all of them combined, depends on the lender always. If you're going to apply for some type of personal loan or a line of credit, they're generally going to look at your general FICO Score 8. Now, as you may notice, all of these credit scores are what we call industry-specific credit scores. There is no platform that gives you an industry credit score for free. If you need help looking at those credit scores, link is going to be in the description for My Score IQ. There's a $1 14-day trial that you can test out to see your industry scores. Now, your industry scores on My Score will be right underneath your credit report's personal information section. Not on the very front. You have to go into your credit report section in order to see that industry score that I just talked about right now. Now, let's go ahead and get into this list because we got a lot of ground to cover. This is not financial advice or legal advice, and I am not an attorney. Coming in at number 5 is never ever put your full mortgage payment or your full rental payment on your application. I know, listen, a lot of people say, but why? Because that debt can be used against you. If your mortgage payment is too high or your rental payment is too high, that can cause you to get a lower credit limit on your credit card or any other type of application that you're applying for because you're carrying too much debt. Now, understand, I'm not telling you to lie, but I'm just telling you all the things that I know that can potentially hurt you during the application process. So be aware. Now, people are going to say, well, how much should I put on there? That's going to be up to you, but don't always put the full amount is what I'm trying to tell you here. Now, be aware, what I'm teaching you right now can also apply to business credit cards because it's going to have the same questions, just a little bit deeper is what they'll do. They'll dig a little bit more for more information about your business. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using Dispute Beast, the most advanced AI credit repair software ever created. But specifically, I want to give a shout out to Matthew. Matthew's credit score went up 285 points after 1 round with Dispute Beast. And Maurice's credit score went up 237 points after 1 round with Dispute Beast also. But let's not forget Shakia's credit score went up 215 points after just 1 round with Dispute Beast also. Now, Dispute Beast link is going to be in the video description and pinned at the top of the comments for anyone that needs to fix their credit. Remember, credit is all about risk. We need to show the banks and the lenders that we are a low risk borrower. Coming in at number 4 is never put child support or alimony as your main source of income on your application. Honestly, you don't even have to disclose it because it shouldn't be counted as income because it's not something that you're working for. It's just given to you. So you could just add it to your regular income if you do have that additional income. Now, there's some little blocks that'll tell you, do you have alimony or child support? They're asking you that for a reason because they want to know if you're getting extra income. So just add it to your regular income and just be aware that you don't want that to be your only source. Coming in at number 3 is do not put an income that is too low. That's right. If you put an income that is too low on your credit application, it can automatically cause a denial. Even if you have a high credit score, you can be deemed a high risk borrower because you don't have enough income to support any type of debt. Let's think about it logically. They won't give you any money because you won't be able to afford any debt. So the big question is, well, what should I put on my application, Mike? Entry level for any credit card application is going to be $42,000 to $46,000 per year on your annual income for any stated income, because remember, the income on a credit card application is stated income. We don't want to trigger any financial reviews. We want them to accept us who we are with a decent credit score and get that credit card limit that we're looking for. Last part's the most important. And again, I'm not telling you to lie, but understand I've seen this with thousands of my clients that didn't want to listen to me. Well, Mike, I only make $28,000 a year, because these are young guys that are working on their credit, or young gals that are working on their credit, and they don't understand that, like, yo, you're young. I understand you don't make any money, but the bank is not going to let you borrow money if you cannot substantially take on any type of debt. Because remember, the name of the game for any bank or any lender is to get you in debt so they can get you at a high interest rate. If they see that they can't get you in debt, why would they give you any money? They won't. They'll just decline you. Coming in scorching hot at number 2 is never put a high income on your credit application, even if you make it, fam. You have to understand something, that the banks don't trust you. You have to earn your trust. If you're out there and you actually make over $400,000 a year, or if you're someone that's, in a small 3% of Americans out there that makes more than $1 million a year, guess what? The bank's not gonna believe you, because there's a small percentage of higher earners out there. And if you do put a large amount, one or two things is gonna happen. You're either gonna get a financial review, or you're gonna get declined, or you'll get accepted, but only under the terms that you have to show proof of how much money you make. And a lot of people on social media have this skewed thought that if I put a high amount, they're gonna give me a higher limit. No, fam. They're gonna give you a credit limit based on the experience on your credit reports. That's why I say stay away from all of these low limit credit cards. You wanna bank with a major credit union to get you to a higher limit credit card. Once you get that first credit card that's $6,000, $10,000, or $15,000 or $20,000, then guess what? When you go to a major bank and you apply for a credit card, they're gonna see that actual experience on your credit report, and they're gonna be willing to give you a high limit credit card also. It's not about your income. Now, coming in scorching hot at number 1 is never put on your credit application that you are retired or self-employed. And of course, people are gonna come into the comments and say, but Mike, but I am retired. I am self-employed. What am I supposed to put? Listen, fam, I'm just telling you right now, never put that on your application, because it's gonna send a huge red flag to the underwriters, and it's going to cause you to get denied. The credit card companies and banks want stability and low risk borrower. Because remember what I said earlier, credit is all about risk. We need to reduce our risk as much as we possibly can and show these banks that they can in fact trust us. And even if you are retired and you've got some crazy 401k that's making you millions of dollars every year and you're sitting comfortably, but if you put retired on there, they don't care about that. It is all about the underwriting process and what will trigger it. This can possibly trigger a financial review also, or just get you flat out denied. Self-employed is the most contentious thing that people want to argue with me about in the comments or in other videos, saying, oh, that's not true. I put self-employed on my credit applications all the time and I'm fine. Great. Guess what? When you go to other banks, now it's on your credit reports, because everything that you put on a credit application, guess what? It translates to your credit reports as your employment. What you should be doing is putting that you're employed by your company. That's what you should be putting on your credit application, not that you're self-employed. Put on your application, you're managing director, managing partner, whatever you want to put on there that is not self-employed. Put that you're employed, and then give yourself a title or responsibility in your company, which you should already have as a business owner. If you're not doing that, then you're managing your business improperly. To any bank or any lender, being self-employed is a huge red flag, and you are now deemed a high-risk borrower. In order to get that off your credit reports, you're going to have to go through, I don't know how many applications to get it to populate where you actually work on your credit reports. Ask me how I know. I went through that. I actually went through PenFed, the popular Pentagon Federal Credit Union. I was with them for over a year. They put me under review and asked me for proof of my income, which I had because I actually pay myself legally through my company. And guess what? Even when I supplied the documents to show proof of my income, they shut my credit card off and shut it down completely. And guess what? Now I don't have a relationship with Pentagon Federal Credit Union because of that. So I'm speaking from personal experience, so you don't fail the same way that I did. And I learned a tough lesson. And guess what? Now I'm never gonna go back and do any business with PenFed. So I hope you enjoyed this video. And make sure that you watch this next video, because it is about how to delete collections and charge-offs from your credit report. And if you feel that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.